It is most likely a breather that is being taken at the Bank of Japan, and the result of it will be, a mix of policies. What has been happening with negative interest rates is, for one thing, the Bank of Japan thought that it needs a new interest rate, a new instrument, and it now has a new instrument that is potentially very forceful, in particular concerning exchange rates. On the other hand, negative interest rates are highly unpopular in Japan. The banking sector already has very narrow margins, and this is basically a tax on the banking sector, as been seen from the industry side. On the other hand, households are fearing for their savings for the long term. This is the big group of pensioners. Overall, negative interest rates are highly unpopular, and they take time to be further developed by the Bank of Japan.
And Martin, while the larger policy remains unchanged, there is some change in the language. Of course, the BOJ saying they will not cut rates further into negative territory, removing the language saying they will do that, and then exempting money reserve funds, cash park brokerages by individual investors to trade stocks from negative interest rates because of the backlash. Is this a matter of the markets now dictating what the central bank does in Japan?
Partially, yes. The big risk for the Bank of Japan with negative interest rates is that the banks are moving ahead, being frustrated with shrinking margins, and start to charge interest on deposits, in particular deposits on households. This is a move that is actually possible, and it would be a disaster in terms of publicity for monetary policy in Japan, because this would directly hit savers. It would directly hit the incomes of retiring households. The Bank of Japan has to avoid that. So the next policies will probably work together with the banking sector, buying more ETFs, becoming more expansionary on the quality side of quantitative easing policy again, and then finding a tool with negative interest rates by excluding some of the more deposit-related side to the more excess reserve side, to use this as a targeted tool, in particular against exchange rate moves.
Martin, there does appear to be a growing rift between Mr. Kuroda and Prime Minister Abe. Prime Minister Abe distancing himself from the policy of the BOJ this week, and also coming out and saying he plans to put together a panel to discuss potential stimulus, the kind of stimulus that monetary policy has not provided to the economy. I have to wonder how much credibility Mr. Kuroda has left in Japan when you have the Prime Minister who is not backing the central bank.
Well, the blame is going into both directions, which is indeed very, very problematic for Abenomics. The Bank of Japan needs the government to follow through with structural reforms that will trigger the economy to grow in real terms, more opportunities for businesses, more opportunities for investment. On the other hand, the government still almost entirely relies on monetary policy, on the central bank, keeping the government with more deficit spending afloat, and keeping the yen as low as possible. So the blame game here is indeed extremely problematic, and both sides will have to work over the next weeks to come out with a policy setup that is working more smoothly, including negative interest rates, because the Bank of Japan basically cannot let go of this new instrument.
And Martin, when you consider Japanese corporations, confidence was already shaky before this policy in January. When you consider the BOJ statement today, their decision today, and when you consider the Shinto wage increase, where do you expect that to go? Do you expect to see any increases at all?
So far, we have seen that the economy wasn't growing as strongly as before, but investment plans of companies remain basically in place. Also, household sentiment has been a bit weaker, but this was mostly related to the overall international environment. With the Bank of Japan remaining expansionary, the government now on its toes to come up with more growth-oriented policies, including another fiscal stimulus, I think that overall household sentiment and also corporate investment plans will be well in place, and I don't see that we are heading towards another recession here in Japan.